Welcome to the channel. I'm Sarah, and I take hard to explain topics and explain them simply, especially as they relate to the ARE 5.0 exam and architecture concepts that show up in the real world. In this video, I'm going to answer the following questions. What is a profit and loss statement? What is the net operating revenue in a profit and loss statement? How do these concepts potentially surface on an ARE exam? And why does this matter in the real world? Stick around to the end because I have some practice problems and a surprise challenge for you. I think you're going to master it. And before we dive in, a quick shout out to 3 people who recently had just written back to me in the comments section that they passed their exam. So woohoo, I'm really excited for you. Shout out to Tesla, who just passed, and a subscriber named CTRLAABLE, congratulations, and another subscriber named JOM. Congratulations, I am so excited for all of you and can't wait to hear about all of your continued successes on this channel. Profit and loss, income, cash basis. Do these terms sound familiar? If they do, they are the similar terms that are used to refer to a report that talks about the financial well-being of a firm. It's called the profit and loss statement. If you're taking notes, then jot this down. The profit and loss statement is made up of 3 sections. There is the revenue section, the expense section, and the profit section. These 3 sections are used to calculate just how much profit and loss the firm has made. If the revenue is greater than expenses, then the firm has made a profit. That's great. If the expenses are greater than the revenue, then the firm is at a loss. And if revenue equals expenses, then the firm simply breaks even. This matters a whole lot because it shows the business for some period of time what their profit is compared to their incoming revenue. Remember, revenue is simply the amount that the firm charges for its services, and expenses are the cost of producing those services, and profit is simply the leftover amount that the firm has earned after expenses are taken away out of that revenue. I'd like to take a closer look at these sections and identify the financial indicators that show up on a profit and loss statement. But first, I'd like to start with a good solid definition of the net operating revenue. The net operating revenue is the net money left over after deducting invoiced consultant fees, reimbursable and non-reimbursable expenses. And these are all project-related expenses. Now let's dive into an example that we can walk through together. The top part of the profit and loss statement begins with the revenue, or the billed fee revenue here. This is the total amount that the firm charges for all of its services rendered to its clients. To the right of a typical income statement, there are a number of columns that show the numbers or the dollar amounts for that current pay period and compared to a number of other columns from other pay periods. Could be from other years. In our ultra simplified example here though, we're only looking at a profit and loss statement for the current pay period for this month. We'll begin by writing down what the total billed fee revenue came out to that the architects charged for all of its services this month. We're going to say the total billed fee revenue is $400,000. The next line item are the consultant fees, which are captured here, but some firms may also capture consultant fees in the expense section, the next section that we're going to talk about. But based on the Maddox format of the income statement, we will leave the consultant fees here. The point is that the architect may hire a number of consultants from civil, electrical, structural, mechanical, and all of those consultant fees are part of that billed fee revenue. That's why it's one of the first things that are subtracted from the architect's overall billed fee revenue. When the owner finally pays, the money then that was owed to the consultants gets paid back to them. In this example, consultant fees amount to $25,000, and this is money that is owed back to someone, to the consultant. So we're going to represent any number that's owed in red and any number that's positive in green. So the total number for the consultant fee was $25,000. The next few items that get deducted in the revenue section are things like reimbursables, mileage to and from a site, for example. That's if the contract reimburses that mileage, and non-reimbursables, like the sixth site visit when the contract only allowed for 5 site visits. It all depends on the contract. So some firms will include non-reimbursables in this revenue section, but others might just bring it down to the next section, the expense section. For the Maddox format, that's based on the Architect's Handbook of Professional Practice in there, they keep the non-reimbursables in this section, so we'll do the same. In terms of reimbursables, the firm is owed $3,000. So we'll write that number here. And non-reimbursable costs for the firm came out to $2,000, and we'll write that here as well. When you subtract these 3 items from the billed fee revenue, then you get, drumroll please, the net operating revenue. Yes, the leftover revenue is the $400,000 minus the $25,000, $3,000, and $2,000, and that amounts to $370,000 of net operating revenue. This is the firm's baseline, or their ground truth for operating revenue that reveals just how much the firm really has to spend on all of its own expenses. The next section, the expense section, is one of the most critical sections. Basically, it has the 2 major categories of expenses, your indirect and your direct expenses, and a whole lot of overhead in there. By the way, if you want a reminder of overhead and indirect expenses, lucky for you, I have an example of a profit and loss statement in front of me that I created that I'm just going to read off of real quick what some of those example overhead expenses here are, because there are a lot. I'm just going to go through it real quick. Federal unemployment taxes, workers' compensation, advertising, marketing, and then there are your benefits like medical insurance, dental insurance, vision insurance, life insurance, 401k. And then you have your computer supplies, rent, office supplies, telephone, cell phone. And then you have all of your professional liability insurance, your auto insurance, computer software services, travel, donations, contributions, depreciation, taxes, property, permits, licenses, miscellaneous expenses, and revenue. And the list goes on. Well, now that you heard all of that, we can actually continue with this problem, and hopefully it gave you a good sense of what some of those overhead expenses are, because they come straight out of what a typical firm might actually have on their profit and loss statement. Okay, in our example, we'll show some numbers here for the various categories. Direct labor is going to amount to $175,000. And indirect labor and indirect expenses, I'm just going to combine both in this line item. Those amount to $20,000. Payroll, benefits, all of that costs the firm $30,000. And finally, other overhead, which was that long list of items that I just read off, we'll say amounted to $55,000. The math reveals that the firm has a profit of, how do we find the profit here? This is the final number in the entire statement. Well, we simply take this $370,000 of net operating revenue and subtract all of these expenses from there. So let's do the math together real quick. That's $370,000 minus 175 minus 20 minus 30 minus 55. That equals $90,000. By the way, hooray, that is $90,000 of profit out of that initial $400,000 of total revenue. Now we're to the question that you've all been waiting for. How does this potentially show up on the ARE exam, and why does it matter? The first thing to realize is this. If you understand the profit and loss statement at the firm level, the same concepts apply to the project or team level. The numbers are just maybe a little smaller. Just knowing the main pieces of what a fee is made up of, just like what a profit and loss statement is made up of, can take you a long way to answer some of these questions. Say I gave you the total direct labor that the firm spent and the amount of net operating revenue in the current pay period. Do you know what the financial term is that describes the net operating revenue and dividing it by the total direct labor? Well, if you guessed the net multiplier, then you're right. Or if I gave you a problem about an employee's hourly rate and the dollar amount that they had for benefits and the dollar amount for profit, can you come up with the employee's billable rate? Sure you can, because you understand that the fee or the revenue is made up of direct, indirect expenses, and profit. Then you would simply take the combined overhead and profit and add it to the employee's hourly rate to find their billable rate. If these terms are still nebulous, then I super highly recommend you watch my video on the 7 key financial indicators. I'll have it show up here, or I'll leave a link in the description below, and watch that video until you really understand what those 7 key financial indicators are, because I dive into the formulas and present examples for each one. Here are some real-world examples. The first example is, based on the profit and loss statement for the current pay period that we just went through, Firm X has 10 employees at the firm. Using the net operating revenue, find the net revenue per employee and round to the nearest dollar. The next example, based on the profit and loss statement for the current pay period, again, that we just went through, find the profit to earnings ratio expressed as a percent. Hint, hint. Find the formula, then rewind the video to find the numbers to plug in the formula. I use this concept on the exams as well. First, I try to figure out what's the formula if it's a math problem. What are the formulas or the equations that I'm going to be using in this example? And then once I've identified what I'm looking to find, I can search for the numbers, and the numbers are usually right there in front of you, and it's just a matter of plugging it in. Real world practice number 3. Based on the profit and loss statement for the current pay period, again, as we just went through. Part A, what is the firm's net multiplier? And part B, use that net multiplier to calculate the billable rate for an employee on a team who has a $60 an hour hourly rate. Okay, hopefully you're all just as excited as I am to solve these problems and test your knowledge in action. And now, finally to the end, I have a challenge for you. An exercise or a challenge, whichever you'd like to call it, whatever doesn't give you stress. It's supposed to be fun, I promise. I propose that you go to your architecture firm's accountant, or if you're not working in a firm right now or know someone that works in a firm, just find an accountant and ask them to show you a profit and loss statement. Ask for 30 minutes of their time and just go through the profit and loss statement with them and ask them questions. What I'd like for you to do is come back after you've completed that challenge and write in the comments section below what you learned and how that experience went. And if you comment below, then I will personally reward you by sending you a little something for having this go-getter learner attitude. Really, I'm just hoping to encourage you to see that these concepts are out there, they're in the real world, and a lot of people spend time looking at these numbers for their job, and we're expected to sort of learn them for this exam, but actually they're so important. They come up in all kinds of scenarios. I use these concepts on a daily basis, in fact, even though I'm not an accountant. So I really urge you to take this opportunity, find a great accountant, and who knows, you'll make a new friend. If you enjoyed this video, then please smash that like button, leave a comment below, and give me some feedback about what you enjoyed and what topics you'd like to see in the future. And as always, wishing you success and looking forward to seeing you in the next video.